Hi, I'm Tanya Powell-May, CEO of the Legacy Homes GR Real Estate team here at Keller Williams Grand Rapids North. I have the awesome privilege to introduce my guests, and we're going to talk about tax strategies for real estate agents. So,
Hi, Paul Straub, 5-Star Real Estate, also enrolled agent slash tax professional, and have my own firm. I've been doing taxes. This will be my 23rd year coming up, and been a licensed agent for 7 years.
Jamie Rodriguez with 5-Star Real Estate, Rodriguez Homes, and I've been a real estate agent since 2017.
I'm Julie Grevengoed, the broker owner at Clarity Realty. And before, I've been in real estate almost 20 years now, but before I was in real estate, I was a CPA.
wonderful. And I get to facilitate, because I left off probably the most important part, is that I am also a CPA. I've been licensed since 1991 as a CPA and been full-time in real estate since 2014. So this is kind of my love. So I will get to facilitate the conversation between these great agents here today, and hopefully we'll be able to help you with some strategies that will help you to save some money on your taxes this year. So my first question, what are the key deductions and tax benefits specific to real estate that you typically take advantage of during the tax season? Paul, do you want to go first?
Sure. Well, I always tell my clients, so real estate, for the most part, is not different than any other occupation. So if it's ordinary and necessary for your business, you can take it unless the IRS disallows it.
Okay.
So that can vary largely depending on what you're doing, but for a broker who is trying to recruit other agents, you might go out to dinner a lot.
Mm-hmm.
So you might have very large meal expense that is still legitimate.
Mm-hmm.
So.
Great. Jamie?
So some very specific things that I wanted to mention for key tax deductions would be your marketing and advertising expenses. If you're paying for like lead generation, any signage that you purchase, website development and maintenance costs, business cards, mailers, all those things. That's all deductible. Professional services, if you're hiring an accountant or an attorney to help you with legal matters, that is also deductible. And one other thing would be office expenses, like office supplies, equipment, any repairs that you need to your office printer, cell phone bill, a portion of it at least, that can all be deducted on your taxes.
Couple things that I guess go beyond like what you're spending cash on potentially is just deducting your mileage. Like we're all driving around all the time. I use an app. I know this is a question later, but I use an app called Mile IQ that it's on your phone, and if your phone is with you while you're traveling, it'll tell you where you started and where you stopped, and you can tell it if that was a business or personal. That's huge. Mm-hmm. Definitely make sure you're getting mileage. And the other thing that we'd always run into, like, there's not much you can do after December 31. The one thing that you can do afterwards, before you file your tax return, is contribute to your retirement account. Mm-hmm. So if you're looking at your year and go, oh my, I didn't pay in enough, I'd rather put it in my retirement than to pay extra taxes. That's another strategy.
Mm-hmm. Yeah, and one of the other things we were talking about ahead of time,
yeah.
On the home office, so I know if Jamie said that, and Julie said about the mileage, I always tell people those two things are important. If we can have a home office deduction, any mileage that I drive from my house elsewhere is now business miles, not commuting miles. So I always tell people if you can have a dedicated home office space, we want you to have a dedicated home office space to increase that deduction too.
Yeah, let's talk about that home office because it's gotten a bad rap over the years. Mm-hmm. People think, it's an audit flag if you claim home office expenses, but we were talking earlier, we all agree that that's just not necessarily true. So can you speak more to that? Yeah,
100%. We've heard that for a long time that, hey, this is an audit trigger. I've never seen somebody get audited. I always joke and tell people the IRS doesn't even come in unannounced, so they will tell you if they're going to come look at your space. Mm-hmm. But it's not an audit flag, and they have a simplified version now. So it's $5 a square foot. You don't have to depreciate the house. You don't have to add up the business use percentage. It's just $5 a square foot.
The thing that gets people hung up, I think, with home office expenses though, the IRS does require that you use it exclusively for your business. So if it's a office/workout room,
Right.
that's probably going to be
Disallowed. Yes. Disallowed.
Yeah.
Regularly and exclusively used for business is the way the code is written. So that really does mean exclusively.
Right.
Yeah.
Okay. So we talked about vehicle mileage. What's the rate per mile for 2023?
2023 is 65.5 cents.
Okay. So very big deduction
Yeah.
that agents should not forget about. What about like buying versus leasing cars? That's something that agents talk about a lot. And I typically advise people that it just depends. Everybody's circumstance is different.
Mhm.
Depends on how much you drive, depends on if you drive a luxury vehicle or.
Well, I think just as a rule of thumb, the more expensive your car is, the more it's going to make sense to do the actual expense. You can either do mileage per mile, or you can take what it actually costs to run your vehicle. And then you still have to track if it was personal or business, but you can take the business percent as a write-off. So you kind of have to do that math. But if you have an expensive car and you take that, Section 179 on $100,000, I mean, that's going to be more than your mileage. So I think you just have to run the numbers. Like I have a car that's plug-in hybrid, so I spend almost nothing on gas. I commute a lot, and I fill up like every 2 weeks, and I spend $20. It's ridiculous. So mileage is my friend.
Right.
And correct me if I'm wrong, but don't you have to track your mileage regardless of which way you do it?
Right. Yeah.
So.
Yeah, that is a good point. I mean, a lot of times people say, hey, I can bonus depreciate my 6,000 pound plus vehicle. And then we say, yeah, that's kind of true, except if you used it for 60% business,
Right.
you only get a 60% deduction, not 100%.
Right.
So sometimes people think, well, I throw my name on the side of the car.
Right.
It's all business.
Right.
It doesn't work that way.
Right. Thank you for clarifying that. We talked about home office. Anything else related to home office that we need to let agents know?
The only other thing I'll say in home office is that you can do, so there's the safe harbor simplified method. There's the alternative method that you can do as a percentage of the house. So you can take a percentage of your utilities and mortgage and taxes and all of that, which oftentimes is the bigger deduction. But you also have to depreciate that part of your house.
Right.
So if you go to sell your house, you have tax ramifications.
Right.
So even though it's the better deduction, oftentimes clients elect to not take it.
Right.
Because I don't want that problem later.
Down the road.
Yeah.
Okay. Great point. But we're telling people don't be afraid of a home office deduction.
No, absolutely.
If you qualify, take the deduction. What about real estate software apps that you use? Those things are deductible. We talked about Mileage IQ, QuickBooks.
Yep, QuickBooks. Yeah, so there's a lot of different software. RealtyZam is another accounting type software. You can take pictures on your phone for receipts. It replaces QuickBooks essentially. It's a little cheaper. It's specifically designed just for real estate agents. My opinion is, use the software that you understand and makes sense for you.
Right.
For some people, they're not technology focused. They're terrible with technology, but they know how to use an Excel spreadsheet or pen and paper.
Right.
And we're just looking for accurate information come tax time.
Right.
So if that's on a handwritten sheet of paper, fine. If you know how to use QuickBooks, it's a great tool, but it's a garbage in, garbage out. So
Right.
if you are not knowledgeable on it,
Right.
get some training or have somebody else help you.
Right.
For anybody who's a broker that has employees, Gusto, if you're going to do your own payroll, Gusto is very simple,
Okay.
very easy to use, relatively inexpensive. So if they don't want to pay a third-party professional to do it, I really recommend Gusto.
I'll say this about payroll. I have just one employee. My son is my director of operations. But I know enough to know that I'm too busy and don't have the discipline to do the reporting that's required because it needs to be done on time every time, or you pay significant fines and fees. So I typically pay a third party to do my payroll. Some people choose not to, but ADP or Paychecks or companies like that also take care of that stuff.
Well, I think before you even make a decision on what kind of software, first and foremost, have a separate bank account, have a separate credit card that is business use only.
Yeah.
And then a lot of them will import into your software and make things really easy, but you know, if I used this credit card, this was a business expense. So that's the biggest way that people can save on their taxes is don't lose track of of things you spent money on.
I agree.
So when I was a new agent, I did do Excel spreadsheets just to keep myself organized because I didn't have the need for the software at that time. So that really helped me. I had Excel files and I was able to keep track that way. And then as far as keeping the receipts, because no matter what you deduct on your taxes, you have to have proof in a receipt form. I had an accordion file for every year and I just kind of separated my receipts that way just to stay organized. But there's a lot of different ways to do it. It's just what works for you.
Right. So as an accountant, I always hated those clients that walked into my office with a shoebox. So I'm just going to say right now, if you're that person that walks into your accountant's office with a shoebox,
Don't do it.
if you want to maintain a great relationship, don't do that.
At least put them in envelopes.
Absolutely.
Right?
Right, exactly. So I've got to figure out what this is and, so.
Well, I think to that, I think absolutely Julie hit it right on the head is keep a separate bank account, separate credit card. If you can be consistent and stay on top of it and organize those things on a monthly basis, it's not an overwhelming task come the end of the year.
Right.
And I think that's where a lot of agents get in trouble is they don't do anything all year round and then now it's February, March, April,
Right.
and they haven't done anything
Right.
and they're trying to cram all this together and
Right.
it's like worse than going to the dentist for them.
Right.
Yes.
Absolutely. So are you keeping track of your financials every month to that point? Or is that something you recommend that people do?
Well, as much as you can keep it in real time, certainly as your business grows, if you have agents working underneath you or the more transactions you do, the more knowledgeable you can be on where you're at, certainly even compared to prior years. Like what am I spending on advertising as a percentage? What am I spending on these other expenses as a percentage of what I'm doing? If I'm substantially different than a prior year, why is that? Is there something we can do to change? If you don't know where you're at until the end of the year, it's too late to make a change.
Right.
Yeah.
You're keeping monthly financials?
So I try and make it a point to sit down once a month, typically the first week of every month, and just organize that month's expenses. So at the end of the year, I just have 12 months to add up,
Right.
and it's not overwhelming.
Right.
Right. What about you, Julie?
Yeah, I do the monthly. We do, I have a couple different companies and we just do bank recs at the end of the month.
Okay. Perfect.
The other thing too, and I know it's not necessarily a question you asked, but thinking about are you keeping up on this? The other thing, in my opinion, this is not a deduction, but estimated tax payments.
Ooh, that's so
Yeah,
fun.
it's big.
It's not a deduction for the business, but if there's one spot that agents fail on, oftentimes that's the issue.
Right.
They don't know how much money to set aside. They're not setting it aside. They
Right.
spent it all.
Right.
And then at the end of the year, they come see me and they owe $40,000,
Right.
and they don't have the cash for it.
Right.
General rule of thumb: if I don't know anything about somebody's tax situation, they say, "What should I do?" I usually tell them set a third of their profit to the side,
Yeah.
and that it may not be a perfect number, but it's not substantially off.
Right.
So you're not going to owe $20,000 at the end of the year. Maybe you owe $2,000.
Right.
Or maybe you've overpaid a few $1,000s. But that's a big hole to get out of.
Right.
That oftentimes just continues to go, and now we've got 3, 4, 5 years that I've owed $20,000, $30,000, $40,000, and it becomes overwhelming for
Yeah.
people. So that's normally the first thing I tell people is set it even in a separate bank account.
Yeah.
Transfer it over, a third of your profit. That way when the quarterly comes due, that money's not mine.
Right.
That's what I was gonna say, is have a separate account. I'd even go so far as to have it a separate bank,
Yes,
so that you're not tempted to
Sure.
borrow from it very
Absolutely.
easily.
Sure.
And I think at a broker level, a lot of brokers will, that you could tell them, put X amount to this bank account and X amount to this bank account. Maybe not everybody would do that, but,
Most of them do, so
Yeah.
that's an
and just
easy
take it off the
solution.
top,
Mhm.
spend what's left, and you don't have to worry about Uncle Sam.
Right. That's a big deal for a lot of agents. They
Yeah.
just don't plan for taxes or they'll figure it out when they need to figure it out, and it's a big mistake. So,
Yeah. Well, especially in the business where obviously there's highs and there's lows.
yeah,
So you don't know what the next year's commissions are gonna be. You might have a very good year this year, but if your income drops by 25%, it's gonna be hard to catch up on those prior tax payments.
right, right. All right, did we talk about cell phones?
I don't know if we talked about cell phone.
Yeah,
But yeah, absolutely. I mean, cell phone and, so business use of cell phone, business use of internet, even clothing, if you've got your logo stitched into it. So I always think of what expenses can we take that maybe we already have, how do we
Right.
convert them to business?
right,
You don't have to keep track of every phone call, estimated business use percentage, estimated internet percentage. Like I said, if you have your logo stitched into clothing,
right.
you can deduct the clothing plus the cost of the
Right.
logo. Yeah.
It's advertising.
Advertising,
Marketing.
exactly.
Lead generation, right, I don't know.
Is this where we talk about client gifts along those lines?
Well, go ahead. It's
Uh,
not changed very much in a long, long time.
No, this is not indexed for inflation. $25 is all you can deduct.
Yeah.
Per person, right?
Yeah.
Mhm,
Yeah, so it's pretty low threshold, unfortunately.
mhm.
It's actually even per relationship. So sometimes you'll have it where if there's a husband and a wife, that's considered from the IRS perspective a relationship. So I can give them $25 as a couple.
Really?
Yeah, so that one hurts
Okay,
because
him
most
close
of
that
us.
loophole.
Right. So that one hurts, but that's what the IRS standard is. I've seen where companies or people, like I, for example, use the Cutco product quite often, and we have our company logo and my phone number and name etched on the knife that I give as a gift, and I call that's considered marketing and advertising. Anytime they pick up that knife or product, and this is not an advertisement for Cutco, they see my name, so I can write up that as a marketing or advertising expense. But $25 is the threshold for client gifts. There was a change on meals and entertainment. We talk about that a little bit.
Yeah, so 2021 and 2022, it was 100%. With COVID, they were trying to get people back into restaurants. That dropped back down to 50% this year. And still nothing for entertainment.
Okay. Yeah.
So if you're going golfing or buying tickets to a show,
Yeah,
that's nothing.
right.
But
Even if you don't attend, even if you buy tickets for a client to go, it's still considered entertainment.
Okay, that's good to know.
But if you're physically sitting down and having dinner with a client, then you can deduct the expense 50%.
Right.
So if you do a client event, make sure you separate out this part was entertainment and this part was food. If they put it all together in just like a one big fee, that could be problematic.
Well, in like annual appreciation events or things like that, certainly I would make the argument we could deduct 100% of that. It's an event expense, not necessarily an entertainment expense.
So if you bring
but
everybody the White Caps, would that be entertainment?
I would argue that that is like, hey, this is a client appreciation thing that we do annually. I think we could take 100% of that.
So what would you say is like, now it's big enough that it, because what if I
Well-
rent a box for my top 10,
Yeah.
is that entertainment?
Well, probably. I mean, it's going to be a facts and circumstances thing, but like if, hey, I play
I'm
golf.
like trying to find out.
If I play golf every week, clearly that's just entertainment.
Right.
My whole database has not been invited. Certainly you start to segment down your list. The smaller the group, the more selective you've been, probably more likely to be entertainment. But I think if it's a client appreciation event or an employee party, I think it's pretty clear we can take that.
Okay. So the next question that I had was, how do you have your business structured and why?
So, you want to start, Julie?
Sure. I am an S corporation. Well, I'm an LLC that did an election to be taxed as a S corporation. I do have my broker's license, so I can receive commissions to that company. I guess that's an important thing to make note of. That's one of those things I probably did too early. Because I had been a CPA, I thought I'm going to be an S corp. But you really don't want. There's downsides to it if you don't have enough. Like payroll, because you have to separate out your income. Like you get paid through payroll, and then the rest you take as distribution. So that would be why you do that, right? Is so that you can save the self-employment tax on that amount over wages. Well, if you don't have that much income, you're not going to have that much over wages. But what you did incur is now you have payroll complications and the expense that goes with running payroll, and you have a separate return. You're doing an S corp return. That's going to be probably like $1,000 or more, depending where you go. So between the two, you're probably in a couple grand just to have an S corp.
Right.
So you got to kind of wait. And we talked about the qualified business income deduction. When you're an S corp, that is reduced. So you kind of have to do the math and what makes sense. But you don't switch back and forth every year.
Yeah.
You pick one, you stay there.
So for a brand new agent, Jamie,
Yeah.
what were you doing when you were brand new?
So when I was a brand new agent, 1099, sole proprietorship, and as my business grew, I did get my associate broker's license, and then we created an LLC. We get paid into our LLC, and then we did the S election, kind of what you were saying, and then we also set up a C corp. So as your business grows, there's a lot of options that can produce some tax advantages, but I would definitely check with your CPA depending on where you're at income-wise.
Yeah, and I'm not an associate broker.
Okay.
So I don't have a choice but to get paid as an individual. So, so absolutely, for people that if this benefits them, 100%. This I recommend clients do it all the time. Even if I wanted to, I couldn't do that today. I've had many clients come in. Prior accountant set them up as an S corporation. They're not a broker. In Michigan, you have to be a broker.
Okay.
And it is a real problem with the IRS because they'll come back and they'll say, this income really belonged over here in this bucket, so we're going to make you claim it here. And you got wages paid out of your S corp over here. You can't take that away. That's still income to you.
Right.
And it's a real problem. But yeah, so for anybody who has been in the business long enough, there's no exact threshold, but to Julie's point, there's costs associated with it.
Right.
So unless you're going to save at least the amount of tax money that it's going to cost you to pay a third party to do these things, it's just a bunch of jumping through hoops for not a lot of tax savings. Now I will say, S corporation audit rate is like 100 times less than a sole proprietor.
Okay.
Schedule C sole proprietor is the highest audited schedule of all the tax schedules. So for somebody who, we're not doing anything wrong,
Right.
but for somebody says,
Maybe aggressive is
but
the word.
But for somebody who says,
Operating in the gray.
it's borderline for me,
Right.
S corporation tends to get audited less. The other thing, coming back to estimated tax payments, S corporation, you pay yourself wages out of the company,
Right.
has tax withholdings taken out of your paycheck all
Right.
year. So we have some clients that are borderline. Maybe it's kind of worth it, but we're not sure that there's a lot of tax savings. We can essentially force them to have tax withholdings through payroll. So for somebody who's has that ability, but their biggest problem is I'm not disciplined enough to set the tax money aside, S corp actually might be a good option.
That would be me.
Yeah.
Which I do a bonus at the end of the year. I can kind of look at what my income is,
Yeah.
and then I can do a bonus that's all withholdings.
Correct.
Because the IRS considers withholdings as paid equally throughout the year, even if it wasn't. So if you're worried, like, oh, most of my income was in the first quarter, but I didn't pay anything until the fourth quarter, that's a way to make it look like you made it equally even when you didn't.
Yeah, that would be me. I'm just saying. I'm just saying. Okay. How do you keep track of, we talked about some of this, but how are you keeping track of your expenses? We already said we're separating our personal from our business to ensure proper tax reporting and tools. Let's talk about that again, just because we need to help people to do better.
Yeah. So the question is, how are we keeping track?
Yeah.
Well, yeah, so I use QuickBooks,
It's good. Okay.
but I think having, even without that tool, having the separate bank account, the separate credit card, I mean, you're 90% of the way there.
Okay. Okay.
And then it's just a matter of how do you want to get that information summarized and given to the accountant, CPA, EA, whoever you're using.
Right.
But I
Because if
think-
it's a separate account, like I have a little tiny business that it's just for fun, so I don't put it in software. But at the end of the year, I'll go into Chase, I'll export my transactions, I'll sort by by the vendor.
Right.
And I can put little subtotals, and it takes me about half an hour at the end of the year.
Mhm.
So that's cheap.
Right.
If you don't have that many transactions, you're just getting started or whatever, do that.
Right.
Yeah.
Okay.
But I use QuickBooks too.
QuickBooks. Okay.
But it's expensive.
Yeah. It's good. Yeah. Everything's getting more expensive. So we also talked about Wave.
Wave
There's another
accounting.
tool.
Yeah, Wave accounting is free.
Okay.
Realty Zam is another one that is created specifically for real estate agents, and I've got some clients that are using it that really love it.
Okay. Let's talk about some other expenses that we haven't talked about. What about travel and entertainment? Did we talk about that? We talked about entertainment a little bit, but what about travel?
Travel, yeah, I mean, like for conferences and things like that. I mean, it really does. It sounds simplistic to say if it's ordinary and necessary, but
Right.
look, if I'm going to a real estate conference,
Right.
sure.
Absolutely.
Even the other thing though too. So for like meals, it just somewhat relates to travel. If I'm doing a showing outside of my normal metropolitan area, so if Grand Rapids is my metropolitan area and I have to go 2 hours north to go show a property. Normally, meals by myself is not deductible.
Right.
If I'm outside my Grand Rapids metro area, those meals are deductible.
Right. That's a great point.
Not that happens very often.
But at
it-
conferences,
Yeah.
every single meal I eat at a conference.
yeah,
Right.
traveling away for conferences always allows it. But some people want to stop at McDonald's between showings and
Right.
call it business meal.
Right.
Doesn't really work that way when you're
Right.
by yourself.
Right.
But if I'm outside my metro area, it does count.
Great. Great point. Let's see what else. We didn't really hit on desk fees, companies, dollar. What do you see for those types of expenses?
Yeah, like admin fees, broker fees, office fees,
Yeah.
you name it. Like I said, as long as it's related to this business activity.
Right.
Now, again, I can't just slap a magnet on the side of my car and call it all business deduction.
Right.
I can't go on vacation and go look at one house and call it a business deduction. There has to be a business use.
Right.
Yeah.
Yeah. I've seen people typically make appointments before they go wherever they're going related to the business, and then write off like maybe the airfare and maybe a day or two of the hotel, depending on how their business shakes out wherever they're going. But by no means should they be writing off the entire trip if part of it is personal. But
Yeah.
that's an opportunity as well.
Yeah, and on travel, so the IRS is, I always tell people to keep their itinerary. Because on audit, they will look at that and
Yep.
say, is this a business trip or isn't it? Weekends don't count. So I could actually arrange this if you plan it ahead of time enough. If I go to a conference and let's say it's a 2-day conference on Thursday, Friday, I could actually come in on Wednesday, personal day. Thursday, Friday is business. Saturday, Sunday is a nothing day. It doesn't matter if I do them all personal.
Right.
And I fly home. I've now spent 3 of the 5 days that I'm there as personal use, but it's 100% deductible.
Yeah.
You have to plan for that a little bit ahead of
Absolutely.
time. You can't just show up and try to figure out how to deduct it later.
Absolutely. Yeah, that's a good one. So those were the main things that I wanted to talk about today. Are there things that we haven't talked about that?
I wonder if we
You wanted
should
to
throw
share?
out just a little bit about investment real estate. Because I know a lot of real estate agents own investment real estate, or they're serving investors to have a little bit of knowledge about it.
Sure.
Buy dirt when you have the means to do so. Buy dirt. Right?
Well, and you were talking about how earlier today, if you're a real estate professional, and all of us here sitting here with a license, and you have a loss on your rental, you can take that whole thing, which other professions can't.
Right.
That's kind of a cool thing to know.
Yeah, there's specific rules, so you have to spend more than 750 hours in the real estate profession, and there's a lot of different things that actually qualify. But you also have to spend more than 50% of your time in real estate. So if you have dual occupation, you got to be careful with that. But what Julie said is, we have a lot of people who, if you're in real estate, you love real estate, you're likely that you're buying your own real estate.
Right.
Just from depreciation, you also often have losses that aren't deductible. Sometimes it is, but
Right.
sometimes it's partially deductible. But as a real estate professional, I can use, if I lost $50,000 on a property, I can offset that against all my other income. You cannot do that in any other profession.
Yeah, that's sweet.
So
And you're not paying gains on it until you actually sell it. So if you hang on to that thing for years and years, you could have $1 million in equity that is just sitting out there. And the best way to for tax planning is you just pass away. Then your heirs get what they call a step up in basis, which means if you bought it for 100, now it's worth 600. There's this $500,000 in gain. For them, the amount that their gain is going to be on, whatever it was worth at the date of your death. So if that was 600, their gain is going to be based on that. So if they sell it right away, they don't have to pay taxes on it. Like,
Yeah,
that's amazing.
great.
That's amazing.
That is a huge loophole, I think.
Yeah, thank you for bringing that up.
And a thing to be aware of, if you are getting to retirement and you're kind of thinking, I don't want to burden my kids, I'm going to start getting rid of it and gift them the money, like that would be terrible planning. And don't gift them the house either. Like, oh, Johnny's been managing it for me, I'm just going to give him the house. His basis will be whatever yours, we didn't really explain what basis is, but what you paid for it effectively, plus and minus a bunch of things, will be what yours was if it was gifted.
Right.
Versus if they inherit it after you pass, then they get that stuck up on basis. That's a really important thing to understand.
But we will say consult your tax advisor, your favorite tax
For
advisor.
sure.
Yes.
That would not be me because I'm not taking new clients. However, Paul is taking new
I'm
clients.
always taking new clients.
Yeah. Tell them about your business. What's it called?
So Blue Jean Advisors is the name of the company. And I was telling them earlier, I said we purposely picked the name because we primarily help business owners, and we like to deliver in a way that is understandable. This is not a stuffy answer that I just delivered to you in a way that is way over your head. You understand it, you can implement it, and go home and say, I don't fully understand exactly all the details,
But I sort
but
of
I understand the
why.
concept.
Right.
Yeah. So in real estate, just partly because I've been a licensed agent for a while, I mean, real estate is our largest niche. We help agents, brokers, investors in a really pretty big way. And so we see it all the time. Obviously, I'm still licensed and I do some real estate. So I get to see it from both sides of the equation. But there's especially, and we don't have to get into details, but like short-term rentals, Airbnb, verbal type properties, have very specific rules that frankly most accountants aren't doing right.
Okay.
At least half, and probably 70-80% of new returns that I come in, they're not being done right.
Yeah. I would not be the person to come to for an Airbnb because I haven't studied the requirements.
Yeah, so there are some very specific rules with that. Sometimes accountants are treating them more favorably than they should be, and sometimes actually the other way.
Okay.
And it's a real mess to fix.
All right, but that's good that we know
Yeah.
that you're out there for us.
Yeah.
We didn't really talk about retirement planning, but that's something that we also don't do a great job as, real estate agents. I've been in this since 2014 full-time. And now I'm getting to that age where it's like, okay, I want to retire. What does that need to look like? So can you speak to some of the things that people can do as a new agent or wherever they are in their journey in terms of planning for retirement?
Yeah, so for a new agent, I mean, anybody can do an IRA unless their income's over a certain threshold, but IRA is easy to set up. It's cheap to administer. For somebody who starts to make more money, that's always when I say the tax planning starts to happen as you make more money and you have the cash that you're looking to get rid of. So like a solo 401k is very cheap to administer. SEP contributions, that's another type of account. But solo 401k, you can do 20, so for this year it's 22,500. If you're 50 or older, you can do $30,000 and the company can match 25%. So you can put a bunch of money into retirement. SEP is just a max of 25% of the wages that you pay yourself. If you're an S corporation, or 20% of your business profit. So you can put quite a bit of money into retirement.
Do you have to be an S corp for all of these things, or like if you're a 1099?
Yeah.
Is it just Roth and IRA?
No, you can do SEP. You can do 401k. Yeah, absolutely. The one benefit with the SEP contribution is that you can make that contribution all the way up until your extension deadline if you've done an extension. So for individuals, I can do an extension and make that contribution up until October 15 of the year following the tax return due date, or the prior year calendar date, I should say. So for some people, they want to do the contribution, they don't have the cash today. We'll do an extension and say, tell us when you make your $10,000 contribution, and then we'll file the tax return. Yeah.
That's great. Any other words of advice? Now that you've been in this business for a while, you wish somebody had told you when you started as a realtor about tax strategies?
Don't hide from it. And don't be embarrassed about it either.
Yeah.
I think that's a big deal. Everybody talks about, I sold this and I did this and a lot of people get into tax problems. Like it's a common thing that happens. So if somebody's struggling with that, don't be embarrassed about that. But it's not going away. You can't get out of it in bankruptcy. It's just one of those things that you can't ignore. So I guess I would just speak to the emotional piece of it.
Yeah.
Pay it every quarter, get it out of your bank so that it's not a temptation.
Right.
Like I had this emergency. Don't borrow from Sam for an emergency.
Right.
Borrow from your mom and dad. Something else. You know what I mean?
Because the interest and penalties are steep,
Uh-huh.
right?
Yeah.
Yeah, and I would say, I mean, because we do help so many people in the industry, it's pretty common. I mean, that's why I focused on the estimated payments. But also don't be embarrassed if you haven't filed for multiple years or you have prior tax debt. Like professionals say, I don't want to say we don't care, but we don't attach any emotion to it. We say, let's just help you fix the problem.
Absolutely.
So if you
Judgment free.
Yeah, judgment free. So
Absolutely.
if you have prior tax debt and you're trying to figure out a way to get out of the hole, meet with somebody who's knowledgeable in that. Usually I recommend people like, let's get you focused on getting today correct.
Right.
Then we'll figure out the prior year tax debt.
Yes.
And I would say, I've always been a budgeter my whole life, so I've never had a problem with this, but there's highs and lows in the real estate world. I mean, people get really down, they could have multiple months without any closing, and then they make $40,000 in a month, and then they spend $40,000 in a month. And you really kind of have to somewhat budget and plan ahead of time. So when those low months hit, you're not at such a cash crunch that you've robbed from your estimated tax payments to cover your household bills.
Right.
Absolutely.
I guess my advice would be to seek professional advice sooner rather than later.
Okay.
You know, as your business grows and you're doing more and more transactions, it's good to have a good relationship with your CPA, so you can properly plan. Not only for your prepaids that are due every few months, but just, your tax liability purposes. And also having a good financial planner to help you plan for retirement. So when that day comes, we're ready.
Yeah. And my advice would be, there's this red book. If you haven't read it, it's called A Millionaire Real Estate Agent. Shameless plug for Gary Keller's book. But I learned a lot about running the finances of my business and what a well-run team, I have a team, looks like in terms of profitability and how you're spending your money. That things have changed over the years in terms of how we spend our money, because we do more internet lead generation and things like that that weren't present when the book was created. But it definitely gave me a mindset of how to run my business as a business, right? And what a good business and a good profitability looks like with a team, or, you know, a team that's doing the volume that we're doing. And it was just very helpful. So I recommend books, I recommend podcasts, you know, anything like that to just become more literate in terms of wealth building and managing your finances.
Absolutely.
Right?